So continuing the comprehensive problem from chapter 6, we had already completed transaction number 5 and we're moving on to transaction 6. So we see the Capital Projects Fund paid the city's utility fund $50,000 for wiring associated with the renovation. No encumbrance had been previously recorded for this service. So we have transaction 6, we have no entry in the debt service fund. In the Capital Projects Fund, we paid cash for construction expenditures. And then cash of $50,000. And in the governmental activities, we have construction work in process of $50,000 and cash of $50,000. Okay. So transaction 7. On October 1st, 2023, the city mailed checks to bondholders for semi-annual interest on the bond. Okay, so 7, we paid bond interest. So we have, let's move that down one row so we don't run into expenditures, interest of $62,500, so our 5% interest, and we paid cash. We definitely won't need that much space, but you know. No entry in the capital budgets. And in the governmental activities, we have our amortized premium. So remember, that was $50,000 on the bonds divided by 40 years because we amortize it over 40 years, which is $1,250. And then we have interest expense of $61,250, and we paid cash of $62,500. Now to entry 8. So entry 8, sales taxes earmarked for debt service of $350,000 were collected. So that's the $350,000 we estimated we were going to collect at the beginning of the project. So we received on 8, we received cash of $350,000 in the form of sales tax revenues. In our construction project, there is no entry. And then in the governmental activities, we have cash of $350,000 and general revenue sales taxes of $350,000. And now transaction 9. So transaction 9 says Central Paving and Construction submitted a progress billing to the town for $2.5 million. The city's public works inspector agrees that all milestones have been met for this portion of the work. So we've got a completion payment request. Our inspector says that yes, everything's been done and we can pay that work. So this is transaction 9. There's no entry in the debt service fund. In the capital project fund, we had that encumbrance outstanding for $2.5 million. And then now we have construction expenditures. And then we're going to debit our encumbrances. And we have contracts payable. So now we owe $2.5 million on this construction project. And in the government activities, construction, work in process for $2.5 million, and contracts payable for $2.5 million. Okay, on to entry 10. So in entry 10, the town paid Central Paving and Construction the amount it had billed, except for 5% that was withheld as a retained percentage per terms of the contract. So we're going to pay that amount minus 5%. There's no entry in the debt service fund. And we have contracts payable for $2.5 million. Then we have the part that we have retained for construction billing, which is 5% of $2.5 million. And then we pay cash for the remainder of $2,375,000. Then in the governmental activities, we have the exact same entry. So there are absolutely no differences to that entry in the governmental activities. Okay, transaction 11. So 11, grant funds totaling $1.5 million are received from the State Historical Society because eligible expenditures have been made. So we have 11. We have no entry in the debt service fund, except we have cash of $1.5 million and revenues in the construction project fund. And then in the governmental activities fund, we have received cash of $1.5 million. And this is program revenue, grants, transaction 12. At year end, closing entries are made. $1 million of the fund balance is assigned and the remaining is restricted. Ignore closing entries for governmental activities. So transaction 12. We're going to close that appropriations of $62,500 and our budgetary fund balance of $337,500. Then our estimated revenues of $350,000 and our other financing sources, bond premium of $50,000. Okay, and then in the capital project, we're going to close revenues. I don't know why that looked like it was spelled wrong. Our other fund, proceeds of bonds. So we had $2.5 million in bonds. We're only, okay. And then we had the other financing sources, interfund transfer of $1 million. Okay, now we have construction expenditures totaling $2,750,000. One too many zeros there. We're putting $1 million in fund balance assigned. And the remainder in fund balance restricted. Okay. And then we're not doing the closing entry, not because there isn't, but it's because we're skipping it for the problem. Then it's the next year. So we're over the year. So now we're going to record the 2024 budget for the debt service fund. We have $300,000 of earmarked sales taxes are expected to be collected, and the appropriations include a $250,000 principal payment on April 1 and 2 bond interest payments. So 13. We're now recording the next year. So we have estimated revenues, taxes of $300,000. So our budgetary fund balance for the difference, and then appropriations. So our appropriations, we have a principal payment of $250,000, and then 2 semi-annual interest payments. So we have one of the $2.5 million at 5% for half a year, so the $62,500. And then the second one is minusing that principal payment, and that is $56,250. So that's where our total comes from. So we have $250,000 plus 2 bond payments. One paid before the $250,000, so the full 5% on $250,000, or $2.5 million, and then the other one paid on $2,250,000 times 5%. There is no entry. In the construction or the governmental activities. Transaction 14. Sales tax collections for debt service amounted to $250,000. So we received cash of $250,000, and we have revenues of $250,000. There is no entry in the capital projects, and in our government activities, we received cash of $250,000 in the form of general revenues, taxes, or sales taxes. Okay, just a couple more transactions. So we're already at 14. Let's look at transaction 15. We have 19 total. So 15. Central Paving and Construction submitted a final billing to the town for $2 million. Upon final inspection by the Public Works Department, a leak was discovered on the roof. So we have no entry in the debt service fund. And then we have encumbrances. Of $2 million. Construction expenditures. Encumbrances. And contracts payable. And in the governmental activities, we have construction, work in process of $2 million, and contracts payable of $2 million. Entry 16. Public Works employees installed a new sidewalk and landscaping at a cost of $130,000. So there's no entry in the debt service. And in the capital projects, we have a construction expenditure of $130,000. And we paid cash of $130,000. In government activities, we have construction, work in process, $130,000, and cash of $130,000. Entry 17. The roof leak was repaired and the city paid final billing and all retainages. So including this retainage of $125,000 paid. So no entry. We have contracts payable of $2 million. And then we have that retained for construction projects of $125,000, and we pay cash to the construction company of $2,125,000. And that entry is identical in the government activities. 18. The April 1st debt service payments are made. So we have expenditures, interest of $62,500, expenditures, principal of $250,000, and cash of $312,500. There is no entry in the capital projects, and then we have our premium on bonds payable that, remember, we're amortizing over 40 years. Expenses, bonds payable, and then our cash payment. And our last entry. Okay, 19. The renovation is complete. Appropriate amounts are reclassified as buildings and improvements other than buildings. all capital projects funds nominal accounts are closed and remaining cash in the capital projects fund is transferred to the debt service fund. Of course, as this transfer was not anticipated, we didn't know we weren't going to spend all of the money, but we'll have to amend the debt service budget. So first, in the debt service fund, we are going to receive cash of $120,000 from other financial sources, interfund transfer. And we're going to reduce our estimated other funding sources, interfund, and budgetary. Okay, so that amount is just the remaining cash that's left after we have all of the construction expenditures for the year. Okay. We're going to record to the remaining of that fund balance restricted amount. We're going to reverse that. We're going to add to fund balance assigned $880,000. And then we have our construction expenditures, which were a total of $2,130,000. Then we have our other fund uses, interfund transfer out of $120,000, and we paid cash of $120,000. We have fund balance unassigned or assigned. And other funding uses, interfund transfers out. And in the governmental activities, we are going to record the assets at their value. So remember, that's the landscaping. And then we have construction, work in process of those two combined. Okay, so that kind of shows you how we have serial bonds, the construction thing, and how it plays in governmental activities.